Well, Philip, welcome to another episode of Out of the Office with Rod. Thank you again for this. You're like the original, right? Out of
Ah,
office. But last time we were skiing, and that was only a few weeks ago, and at that time we were talking a lot about, the election that had just occurred. We talked about the administrative change in the U.S., and I would say in the last 3 weeks, pretty much everything has changed. Would you agree?
I would agree. What we came into the year or into this administration thinking about were tariffs. That was the only thing we were thinking about at the time. And now those have come and gone in part. We continue to hear more tariff talk in the United States, but it hasn't really hit the market yet. I would say the positive sign out of all this, Rod, is that every single time tariffs come up, there doesn't seem to be a violent reaction in the markets. The markets do adjust a little bit, but not to the worst case scenario, meaning the markets are more comfortable with the fundamentals of the economic environment than any of the ideology policies coming out of the White House.
So as you can imagine, and I mean, I couldn't ask for better timing, I think, you know, I'm having multiple meetings per day. How often do you think, or how long do you think it takes before the discussion comes up of what do you think is going to happen with the tariffs and Trump? And it must be an incredibly volatile period right now, and that things must be really bad.
If your conversations are a lot like my conversations, it always comes up in every conversation that we've been having anyway. So I got to imagine you're being inundated with the same questions that we are. What does it mean for our portfolios? What should we be doing?
That's exactly it. And like everybody, I mean, for one, clients want to know we're being proactive, right? I think this is a great opportunity for us to maybe relay to our clients how sophisticated, first of all, our modeling is, but how deep it is, right? As far as a bench strength goes.
Exactly.
Okay?
So what we did is after the election or leading into the election, my team and I did a lot of work on the impact of tariffs the last time that we saw this during Trump, let's call it 1.0. And it was a fairly muted market response, but being prepared for it is the most important thing. So in our portfolios that I oversee, we added to some of the safe haven trades, which we would call gold, for example, buying US dollar pay bonds, where we could see some further weakness out of the Canadian dollar and strength out of the US dollar, trimming our US large cap position, going to small caps that are less sensitive to trade. And these are all positions that we put in place well before the announcement that we saw right after the inauguration back in November. And so it's all about, as you point out, the preparedness well in advance.
Yeah, and I think, clients naturally are concerned, what are we doing? So, I mean, proactive is for one. You'd mentioned to me, just as you did before, that we had really pulled back in our U.S. positioning well before before election results, et cetera, but for economic reasons.
Mm-hmm.
Not because we're worried about the U.S. economy, but I'll let you finish the sentence.
Yeah, everything comes back down to the fundamentals. And so the U.S. economy actually is on solid footing. Let's put the tariffs aside on that. The data that we follow is actually leading to the positive. Things are ticking better in the U.S. than worse. But when it comes to investing, you also have to factor in the price that you're paying for the securities. So in this case, when we look at U.S. equities, they've had a great 2-year run, and they're starting to reflect that in terms of their price. They are fully valued, we could say, in some cases overvalued. So taking profits is a prudent thing to do. And as a wise man once said, you never lose when you take a profit.
Yeah, isn't that true? Well, there's other parts of this equation that are very fearful. And I mean, there's been so much, again, we're sitting here, it's 3.5 weeks since there's been a change in the US. And in 3.5 weeks, the news cycle again is at a heightened pace. And, the rhetoric, for many people, is very scary.
Mm-hmm.
It's not just about this 51st state. But to be fair, we have so many amazing things about our country, not just the people, right? But when you think about the minerals, the mining opportunities, you think about the rare minerals that we have, certainly our oils. I mean, you can understand how great it would be for them to get their hands on even our water.
Yeah,
right?
absolutely. But how does that impact our portfolios? It can keep us up at night from a political standpoint, from a moral standpoint, a national standpoint. But it doesn't really enter into the conversation of how does that change the prospects of our Canadian banks.
Yeah.
At this point, we need to set aside the fears of the extreme what could happen to how our business is operating today.
Yeah, and thank you for that, by the way, because that is exactly how we talk to our clients. Because there's two aspects. There's the news, the noise, right, that's out there, and then there's the economics, right? And we deal in economics, don't we? Right.
All the time.
So rhetoric is one thing, actions are one thing. When we see actions, we have to react. We try to be proactive in all things, but let's just keep moving. As you can see, by the way, we're in Kelowna, and it's about -6. How are you doing?
Doing well. This is a beautiful day.
Okay, you're from Toronto, so I
Yes.
understand. Yeah. So, it's nice to stand in the sun too. So here's the thing about the tariffs. I'm an economist, yeah, and I grew up understanding tariffs were part of my life, just with my family and what they were doing, and how it affected them. But the tariffs themselves fundamentally are protectionate in fear. It's a fear-based response.
Yes.
Would that be fair to say that?
Yes.
So when you live in fear and you make decisions based on fear, nobody wins. No, absolutely nobody wins. And so fundamentally, if you bring in a tariff, and I'm going to use Ford as an example. This is a very simplified version, but so Ford buys a lot of its auto parts from Oshawa, Ontario, right, where they're produced. Okay? So as they're produced there, they're using a Canadian dollar, which is at a deep discount. Maybe the country there, or the company there, is using a lot of robotics, so they're keeping the building costs low, right, because of the volume they're using. So the second they put a tariff on, that means that product became 25% more expensive for Ford, which means either their profitability has gone down, or they stop selling vehicles, or they have to charge more, and neither one of these is a win.
Right.
The CEO of Ford today said if these tariffs came in, you can kiss the American Automobile Association goodbye.
That's true. Tariffs, we know from the Great Depression that tariffs prolonged the Great Depression. They didn't solve the problem of the Great Depression. They actually contributed to the destruction at that time of the U.S. economy and the global economy, for that matter. So I don't think anyone is on the side of tariffs. Everyone is saying the same thing. And what we've seen, though, Rod, I mean, let's allow cooler heads to prevail. When the announcement was, tariffs as soon as I come in, well, it didn't happen day one. Well, it was going to be tariffs February 1st. Well, it didn't happen February 1st. And then by the time it came around, they got delayed by another 30 days. This is kind of the game that we're seeing out of the White House. It's here's the threat, but it's going to keep being pushed off because there's something else that is going to be done. Whatever that is, who knows? But I think tariffs are the worst case scenario, but also the least probability scenario to play out.
Yeah, and I think the key point, going back to what you said before, is we're looking ahead all the time, right? But it always comes down to the economics. And if balance sheets are strong in corporations, if the economies are strong and consumers are still consuming, we can avoid areas of the market that are troublesome. We can avoid being in the market with lumber, as an example, right? Where we have an extraneous event that's very cyclical. We don't have to be there because there's so many other wonderful companies. I'm just going to keep moving because my hand is freezing. So I'm going to give you an example, and some people watching this might laugh when I talk about it because they'll know what I'm saying. So my example about understanding how economies continue to function, right now we're filming this on an iPhone. And an iPhone is one of the top selling phones in the world today. Yeah, made by a small little company called Apple. You may have seen their symbol, right? But they, which we own, right?
Yes.
So right now, Philip, you have an iPhone as well. And let me ask you this. So we have a regime in the US which is very protectionate. They put tariffs on everything. Matter of fact, they cause a deep recession, right? But you're working, you still have some capital. And we have Donald Duck as our prime minister now, when nobody's really running our country. I'm just saying, right? So it's a crazy, crazy, crazy time. Again, I'm not saying about currency. I'm just saying future-based, right? So we're a year out, and this is what's happening. And your iPhone died. You need an iPhone. Would you go, I'm not buying an iPhone because I don't like either who's in power down in the US or there's tariffs in place and it's not affecting the price of what you're buying, right? And I don't really like who's our prime minister at the moment. Would it stop you from buying an iPhone?
No, not at all. We're so attached to these devices, whether it's an iPhone or something else. At that point, it becomes, what do I need? What do I want? What am I willing to spend? And politics doesn't enter into the conversation.
Yeah.
And yet, I think the point that you're trying to make is, why do we let it enter into the conversation
Yeah.
when we're talking about our portfolios?
Yeah. Yeah, that's exactly what I'm trying to make. Because you'd go buy one, I would have to buy one, and I would argue most of our clients would go buy one, and Apple just got paid.
Exactly.
That's what happened.
That's
right?
exactly it.
And that is how the economies work, you know. And if there's an unfortunate event and the price of fuel goes up, you know what? Then people will drive a bit less. They may change how far they drive. They may change behaviors. If all of a sudden there's a trade war and we can't get oranges from Florida, we'll get them from Guatemala.
Absolutely.
Right?
And I'll just add one, because I did get this question earlier in the week from a client that said, I don't like what's going on in the States. I want to sell all my US equities.
Interesting.
And it's a fair question, because
sure.
Immediately we draw politics to our portfolios. But then we had this conversation of, well, what about Apple? Is that a good company? Well, yes, it is. Okay, what about Johnson & Johnson? Have you ever taken a medication? Well, yes, I do. Okay, well, what about, and we keep coming up with examples of McDonald's. Have you ever had a Big Mac? Well, yes, I have. Why would you punish these companies for something that is more a political interference? And yet these companies will continue to do what they do well, which is generate profits.
Well, yeah, it really does come down to fundamentals like that. And you can understand as a client, all they're hearing is news, and it is scary, right? It is rhetoric. Mm-hmm. We're all affected by the news. We have, because of really you and your team and the news that you continue to give us, we're able to understand the fundamentals. We see what's going on, and that's why, we take the time to do these videos. Again, thank you, Philip, but also to make sure that our clients know to reach out. Right? I'm not saying we have all the answers, but we probably have more than what you're hearing in the news. I would argue that. And also we get away from that news. It's really just about the facts.
Absolutely.
And I'm very grateful for the job that you do, right? How wonderful the portfolios are and how they sail through. What we're looking for, of course, is consistency out of portfolios, right? That's what we're looking for. Everybody wants that. Best performing portfolio, least amount of risk. And you continue to set the bar high in that. So thank you very much.
Well, it's my pleasure, and thank you for having me here in this beautiful day.
Yeah, thank you.